Good morning and welcome to today's STP question and answer session with Chantel Wayman from the ATO. We'll just give everyone a couple of minutes grace to log in. I can see that the number's creeping up by the second, so we'll just give everyone a moment or two. On the backsplash screen, I've put two links for information. One is the ATO reporting guidelines for STP2, which is actually a really good document. Some of the ATO documents are a bit cloudy, but this one is fantastic, I have to say. And also a MicroPay resource that we've got where we've got questions and answers that have been coming in. You can go in there and have a look, and your question might have been answered already on a previous session. There's also another resource which I've put in the chat bar, which is the commonly asked questions and mistakes, which the ATO are getting at the moment as submissions are coming in and as people are working on mapping their data. It again is a really great resource. We're using it really heavily, so the link for that is in the chat section. I'll give everyone one more minute. Okay, we've given everyone 2 minutes grace. So I would like to introduce you to Chantel Wayman, who is the Director of Single Touch Payroll, STP, Employer and Intermediary Engagement at the ATO. Chantel has 16 years experience in tax administration, working with operational teams on priority projects, with a number of years focusing on initiatives at the forefront of the ATO's digital strategies and initiatives. Chantel has spent 7 years with the STP program, working on the design and policy, and is now focused on supporting employers and the intermediaries to transition to STP Phase 2 reporting. So I'd like to thank Chantel for joining us today and welcome her. I'd also like to welcome our customers that are using Attaché, Definitive and MicroPay platforms. We've got all three business units here. Before I start, Attaché, your deferral runs out in about 5 weeks. So if you haven't got yourself on STP2 reporting, do so now or apply for your deferral. I'm telling you this up front because I want you to have this in context of the information that you're getting now so that you make the most of our discussion with Chantel. Definitive don't have a version that's STP2 enabled yet, but it is a great time to start mapping all your data. So think about all your data that you've got in your pay items or pay components and what they need to be mapped to, what your leave needs to be mapped to now. Get it all mapped so that when you're at the point of go live, you're then not have a whole heap of questions. You can do that up front now. There is nothing preventing you from getting that strategy in place now. MicroPay, 2/3 of the customers have got STP2 enabled software now, and it's exciting to see the reporting start to go through each day. I was just checking it now, watching the green ticks go through, so it's very exciting to see. The remaining customers of cohort will get their version on the 28th. That's only 2 sleeps away. So again, if you haven't started preparing, start now. Now, I have to admit that if any of you have watched any payroll videos, from TAPS or on the ATO website, you'll all know Chantel's face. And I have to say, when I was in an ATO meeting, I was a bit of a fangirl, and then she offered to come and do this session with us, so I'm inordinately grateful. And she was just saying to us off air that she ran into someone in the street that recognised her. So that's very exciting. Thank you for joining us, Chantel. So I'll just take Chantel off mute. And I've also got Cherie Chaplin with us. So Cherie is one of our MicroPay team members, and she knows both STP, WageEasy and MicroPay, and will be here to answer any questions that fall outside the boundaries. And I'm not able to unmute, so Cherie, I think you'll have to unmute yourself, sweetie.
Hi, everyone. Thanks for having me.
Thank you for joining us, darling. So, Chantel, did you want to give an introduction about what your experience has been so far, how you're finding the rollout, what your feedback has been?
Yeah, I will. Thank you, Philippa, for that very lovely introduction. I always get a bit embarrassed when I have to do that sort of blurb about who I am, but I am just Chantel, a person, and I am lucky enough to have been around in STP now where I've supported phase 1 transition, and now, of course, I'm responsible for phase 2 transition. And look, Philippa, it's my pleasure to be here because I really do want to help employers get this stuff right. As we know now, we're using this data and sharing it over to other agencies like Services Australia to help Centrelink improve their benefits. And obviously STP is such a beautiful, rich data source now that we really want to use this to help employers and customers of Service Australia and our community to get the right payments at the right time. We're trying to streamline some of that yucky having to report multiple things about multiple people to multiple government agencies. So this is another step in us really trying to help to get that stuff off the ground. We're going really well. We've got, I think, about 4.6 million individual employees now being reported in STP.
That's excellent.
It is, it's really good. And I think we've almost got about 30% of employers over the line now and reporting in the system. So like you say just then, Philippa, you're seeing all those green ticks from customers transitioning over. We're seeing the same. And I think over this next few months, we're going to see a lot more because, as you just mentioned, we've got products that are becoming ready by the day and deferrals expiring soon. But we can talk a little bit more about what my key messages are there a little bit later. But certainly STP2 is here now. It's not something that, you know, if we think about last year, we were still talking about this thing in the future and what is this? But obviously the questions we're seeing come through now are the right questions. It means people have turned their mind to it. They're starting to map their pay codes and preparing their data, which is great to see.
Excellent. So on that note, I might start by going through some of the questions that we've received. If your question isn't in the list that Chantel is addressing, one, it might be that we received it late. If you're a person that runs late, apply for your deferral now. It might be that it was product specific, in which case it's being referred to the team that are available for that product. Or in one case, we required further details. So I will forward that email onto Chantel, who will answer it directly. So that if your question isn't here, then that would be one of the reasons why. So the first question we've got is from Sue. We offer purchased leave to our employees, and they salary sacrifice an amount every fortnight to their pay to cover the extra leave, which can be taken throughout the year. I have set this up as a deduction before tax for the fortnightly deduction and leave type reason called purchase leave for the actual leave taken. I'm just trying to work out how both the deduction and the purchase leave taken should be set up in STP2. So that's the first part of that question.
Yeah, and look, that's absolutely valid, Sue. So there are a few ways that purchase leave is treated, and different solutions and different agreements and things, you know, treated a bit differently. But the example you just mentioned is absolutely acceptable. So that's when the deduction happens, report that as salary sacrifice type O, and when the leave is taken, report that as paid leave type other. But I do want to recognise that there are a couple of other ways to do it as well. And so it's not wrong if employers out there are doing it this other way that I talk about as well. And that is perhaps you're treating it like an annualised reduction. In that case, when it's deducted, you don't need to report it. So you don't have to put it in gross. And then when the leave is taken, it is paid leave type O. All right, so that's another way as well, because some people do just treat it as an annualised reduction. There's also some employers out there who do it as a post-tax reduction. When it's post-tax, it's not reported in STP. So you don't need to report the deduction and you don't need to report the leave when it's taken as well. So just wanted to recognise, I think a majority of people are going to do the way that Sue just mentioned, and that's salary sacrifice type O and then paid leave other, but just wanted to recognise that there are those other methods as well that some employers do.
Yeah, thank you. So she said in STP2, I currently have a deduction before taxes, salary sacrifice O, which is the employee benefit, which you're saying is correct.
Yeah.
And then purchase leave taken as a leave reason paid leave O. And so it's that one that's
absolutely
open to interpretation.
Yeah, and it's absolutely okay to do it the way Sue's just suggested.
Lovely, thank you. The next question we've got is from Rachel. We currently accommodate toil for overtime worked at our workplace. The amount of time accrued is the equivalent of overtime rates. For example, 1 hour of overtime equals 1.5 hours of toil accrual. I have two questions regarding the categorisation of this. One, the accrual or bank of the toil currently sits in our payroll system under allowances, but doesn't pay dollars to the employee, it just accrues the hours. Which STP2 reporting group and subgroup should this allowance fall under?
It's actually a really, really good question from Rachel, and we get this in different permutations about hours banked. It could be hours banked for toil, or it could be flexi time, or it could be annual leave. The key thing to remember here, Philippa, is that you only report amounts paid in STP. So obviously you've got fair work requirements of how you've got to, store the data and make sure you know where people have got leave and things like that accrued, but you don't report accrual of hours through STP. So paid is the key word here.
Yeah, excellent. The subsequent payment of the above is taken during regular working week. For example, a team member may finish early on a rostered day and then the toil is taken. Which STP reporting group and subgroup would fall under paid leave, other leave, or overtime?
Yes.
And this is a question we're getting asked an absolute stack.
Okay, good. So let's clear that up straight away. So the key word here is there has been a payment made. So we know that that is STP reportable. And toil is taken, once the toil is actually taken and being paid, it's actually reported as paid leave typo. So if you check our employer guide, we've actually got tables with this stuff here referenced, and toil is a clear one that is in paid leave-o. So if you haven't checked out our employer reporting guidelines, here is just a bit of a plug for those, because usually you can get your answer out of that sort of stuff, because our tables, we've tried to really keep our commonly asked questions and things we get lots, we try to put those in those tables so that it's clear for you.
Yeah, and they're really good, I have to say. The guides, we spend a lot of time trolling through them to answer questions for people. They are spot on.
I do too, all the time.
The question that's not there and that I would add, though, is the follow-on question from that is we get when people terminate and they have it cashed out. Generally, it would go under C for cash out, correct?
So there's a couple of different things. So it depends on whether it's cashed out at leave in service.
Or overtime.
And so there are a few different little weird things that happen with terminations, because sometimes it could be an ETP as well, like for RDOs, but the employer guide covers that stuff.
Yeah, excellent. Yeah. So the next question we've got is from Rachel again. I have a question regarding post-tax voluntary contributions to super. Are these excluded from STP reporting as they are post-tax? If not, what category should they be under?
Yep, so you're on the right track there, Rachel. Post-tax voluntary contributions are not reported through STP. All right, so post-tax, you just don't report post-tax deductions or contributions. But I do just want to point out there, Philippa, just to clarify and just make sure employers are actually thinking about it, that is different to SuperStream obligations. So with SuperStream, you are required to report post-tax contributions. So just make sure you're separating the two. SuperStream is a different obligation, but in STP, don't report it.
Lovely, thank you. If unpaid leave is excluded from STP reporting, as there is no tax treatment required. If not, which STP2 reporting and subgroup does it go under?
Again, Rachel's on the right track. So there's no payment being made here. Our golden rule is if you're not paying, it doesn't get reported. So no need to require, no requirement to report unpaid leave through STP.
Lovely. So the next couple of questions are a bit industry specific around teachers. I was wondering how leave for teachers needs to be classified, since strictly speaking, teachers do not receive annual leave, but are entitled to 4 weeks annual leave loading. Teachers do not work during school holidays, so I was wondering if payments they receive when the school holiday is on should be recorded as leave.
Yeah, look, it is a little bit of a difficult one for the ATO to answer, explicitly, because all the different states have different industrial instruments and things. So the basic principle is you should refer back to your industrial instrument to identify what the amount you're paying actually is. So in the context of teachers during the school holidays, that instrument will identify whether it is leave, and if so, what kind of leave. So if it's called annual leave, then that's, reported as paid leave. You know, if it's treated just as though the employee is at work, you know, treat it so it would probably just be gross. Or if it's telling you in the instrument that it's treated as something else and it's called something else, those sorts of things will inform where it goes. So you must go back to the industrial instrument, and then that will tell you where it's got to be classified in STP. So I know that's not the answer everybody wants, because I know people come along to these things and go, tell me where I've got to report something. But really the premise of these things is go back to that instrument, tells you what you are paying and why you're paying, and it should lead you down the right path of how it's got to be reported. Generally speaking, it's either going to be paid leave typo because it's annual leave, or it's going to be gross. But just go back to that instrument and check. Yeah. Now, you know, also what I might say, sorry, Philippa, is the reason why there's like not an exact science to that one is because lots of instruments are differ between states and territories and religious sector schools and various different denominations and non-government, you know, all that sort of stuff. So I don't want to be too specific because it will depend on what that EBA or that industrial instrument says.
Yeah, that's true. And we do give the advice when we do our daily sessions too, a lot of the time, that they need to go back and read their award or read their EBA to see if items are included in a tool allowance, for example, or whether they are not, and therefore more a discretionary item to help with that coding. Yeah. So yeah, it's the same advice we would give. Sharon has asked, we seek to understand how RDOs should be treated in STP2 world, including the portion, normally 2 hours each week, which is deducted from time worked to increase the RDO bank, the hours paid when the RDO is taken, i.e. the employee doesn't work but is paid hours from the RDO bank, and payout on termination.
Yeah, easy. So we can cover those one off. So there's 3 questions there. The RDOs that are banked, they're not reported in STP because you're not doing anything, that's just banking of hours. RDO, when it's taken, is reported as paid leave typo. RDOs that are paid out on termination actually are ETPs. So we've got some pretty good guidance on that. If you go and have a look at what's included in an ETP payment on ATO.gov, that'll tell you that RDO is not taken or in there, but paid leave for when they do take one.
Excellent. Make it sound very easy.
Honestly, it's not.
Off your tongue. You've obviously done this before.
No, but you know, I'm in the employer guide every single day looking at this stuff and answering common questions. So, you know, not going to say it's all easy, but generally speaking, the employer guide will lead you right, you know, down the right path.
Yeah, I have to say last night I was reading some scenarios where it said, you know, if this, do this, if not this, do this, and then it would give you the next tier down. And I found those scenarios really helpful to map, you know, it's no here, it's no here, it's a yes here, so therefore it's this.
Yeah, and look, I think, you know, with things like paid leave and RDOs and toil, they're very common. Lots of us have those within our businesses, but I'm not going to lie, we sometimes get a couple of curly ones where we scratch our head and think, oh my goodness, never heard of this before. Let's look at it and unpack it.
Yeah, absolutely. Then the next question we've got is from Julie. What are the STP2 allocations for salary sacrifice pre and post-tax novated lease?
Yeah, so pre-tax, okay. So with phase 1 requirements, just reminding everyone that you always reported post-sacrifice amounts to us, but in phase 2, you need to report pre-sacrifice amounts. So from a pre-tax perspective, if the employee is salary sacrificing for a novated lease, the pre-tax component should be reported as salary sacrifice typo. So that's just salary sacrifice to something that's not a super fund. But again, just going back to that premise that post deductions are not reported in STP. So the post-tax novated lease, not reported in STP.
Excellent. Lynette has asked again about toil. You can see how topical this is. We do time in lieu. How do we categorise time in lieu? Hours banked, addition before tax. There is no money value to it. It is just adding extra time worked to the employee's total time balance. The options I have are allowance items, bonuses, commissions, directors' fees, gross, lump sum payments, overtime, and paid leave. I rang the tax office this morning with the question, and the person I spoke to didn't know the answer and told me it was up to me to do what I thought was best. I'm hoping someone can help me get it right.
Yeah, of course. And, you know, I ask call centre staff are still learning this stuff as well. You know, they're not necessarily payroll people because obviously the tax office has now really delved into payroll. So, yeah, apologies that you didn't get that answer on the phone. But this one here, Lynette, you've actually answered your own question in the question. So I tell you why. You don't report hours accrued, like I've mentioned before. You only report amounts paid. So where you've said there's no money value to it, that's your hint. There's nothing, there's no amount, there's no dollar figure, so you don't have to worry about reporting those hours paid.
Excellent. Next question we've got is from Patricia. I'd like to know if a staff member cashes in annual or long service leave, does it need to be set up separately for STP2 reporting?
Yeah, and that's a really good question. So it all depends on whether it's being cashed out in service. So the employee is still staying employed, they're just cashing out their leave to get some extra money. But it is a different story if the leave is being cashed out when the employee is terminated. So if it's being cashed out of leave in service, that is paid leave type C. If it's upon termination, it's paid leave type U. So it just depends on whether they're staying or going, and that will lead you to where it's got to go.
Excellent. The next question came in from one of our webinars that we held during the week, and it was around directors and whether directors should be classified as part-time or casual as their basis of employment.
Mm. Yep,
that's a really good question because yeah.
Yeah, and so really, let's just treat this exactly like we would an employee, because it actually depends on that director's contract of engagement. So they could be full-time, or they could be part-time, or they could be casual, just like anybody else. The contract of an engagement of the director will identify the basis of employment. If not, then you need to liaise back to your industrial relations team or try to determine the relevant basis from the definitions in the employer guide. So, there really should be a contract of engagement in place, and that should tell you. If there isn't, you're probably going to have to work it out with the director or, back to that, industrial relations content. But yeah, I think people probably don't realise there's supposed to be a contract of engagement for directors, so something to think about. It's not an STP issue, but something to think about if there's no contract of engagement.
So by contract of engagement, do you just mean if they're going to come to a board meeting once a month for 12 months and that's in writing somewhere, then they're part-time because they've got that contract of engagement that's what's required of them?
Yeah, look, I'm not
going to when you're ready, you float.
Yeah, I won't profess to be a real expert on director contract of engagements or anything, but I would imagine so. And there's probably some good advice online if you go and have a look at, what should a director's contract of engagement have in it. But I would imagine it would have things like that in it, Philippa, for sure.
Yeah, excellent, excellent. The next question we've got is from Lorraine. We have employees paid from one site using different software, still currently reporting STP1, all being employed through the same employing entity, and at some point will have to transition over to the software they use at the other site. Will there be issues with transitioning the STP2 reporting if the other site is still reporting STP1? And will the transition to the same software need to be done at the end of financial year, or can that be done at any point?
Yeah, so this is an interesting one, and I had a bit of a think about it, and I really think it comes down to product functionality, Philippa, and then what products are they, and talking to the provider and the DSP as to, you can't really, you shouldn't really go to phase 2 and then go back to phase 1, but it all depends on how those systems integrate. So happy to really talk that one through you, Philippa, if we wanted to work on some advice together. I think one of the mistakes people make is transferring employees from one software product over to another, not bringing over year-to-date balances or bringing over year-to-date balances and forgetting to zero out over in those other products, and then we end up with duplicate income statement. So very, very important question, but it really does come down to product functionality, definitely.
Yeah. Yep, that's again a question that we're getting asked a bit, where people have got shadow payrolls for different purposes, and recording, for example, actual hours worked versus the salaries they're paid and that sort of thing. How do they reconcile all of that?
Yeah, sure. So with the shadow payroll stuff, we've not changed any of our position that there are still those concessional reporting arrangements in place. But yeah, certainly when moving from one product to another or having employees over, multiple different products, there are some nuances there that you can definitely get wrong, which results in, not a very nice employee experience. So got to work that one through.
Yeah, perfect. So the next question we've got is from, I've just lost my sheet, of course, as you do. Smita, we have a question regarding the treatment of contractor super through the payroll. Currently, upon advice from Micropay, we have suppressed the data from flowing through to the ATO. These contractors are paid through accounts payable, only super paid by payroll. What would the treatment of this be in STP2?
I reckon this is in our top 20 questions that we get all the time about contractors. So reporting amounts to contractors is still voluntary. It always was in phase 1. It remains so in phase 2. So there are no changing requirements. You do not have to report them. If you are choosing to report contractors through STP, there are some specific fields required. So you still need to choose like an income type of non-employee, etc. So again, they're not in scope of STP, but a lot of people do choose to report the STP just because of the voluntary super liability. If you report this, you need to include the ABN of the contractor, and there's limited fields. So we do have some really good guidance on it. But again, in this Smita's example, she's choosing not to report it through STP, and that is absolutely okay to suppress it and not send it through. If you're choosing to, there's a bit of guidance in the employee guide about the different fields you've got to put in, because they're a little bit different than reporting employees.
Lovely, thank you. The next question that we've got is our Queensland EBA has below service increments. Should it be treated as gross wage or as an allowance? If it is an allowance, what type of allowance should it be under STP2? And they've put an example of after 6 months, $12 an hour, after 12 months, $24 a week, that sort of thing. So they've put an example below.
Yeah, and I think with this one here, because the clause lends itself more to smells like an allowance, mentions kind of allowance, and it referencing that all purpose, to me it looks, smells and feels like an allowance. So I would recommend that this actually gets reported as a task allowance, because it's an additional amount of money that the employee gets to do their job. This is very different to a normal regular salary increment. If that was the case and it was just a general, yearly salary increment or something like that, then that just continues to get reported as gross. But that one smells like an allowance, and I think it's task.
Thank you. The next questions we've got are 3, and they come from Kobe. And I have to say, Kobe messaged me last night to make sure that you got his questions or her questions. So
good one.
It's important for us to answer these. Deferred salary scheme. So our employees have the option to set aside 20% of their salary as a before tax deduction as part of a deferred salary scheme. They get paid the remaining 80% each fortnight. The 20% accumulates for 4 years to give them a 5th year off, paid at 80% of their salary using these accumulated funds. Sounds like a good deal. The only STP2 categories for deductions before tax are salary sacrifice or deduction. The deferred salary scheme fits neither. Can you please advise how to categorise these deductions? I was thinking we change the deduction to an addition before tax and enter the amount as a negative so that they deduct from the employee's pay. That way we could categorise it as gross.
Yep, and that would be okay. So there are different arrangements and different wording clauses about how employers treat this kind of thing. So it will come down to depending on like the clause of those sorts of agreements, but it could just be that you reduce gross, like Kobe just said, or it could be reported as a salary sacrifice where you report that higher amount in gross and then the reduction of pay at salary sacrifice type O. So either of those options would be completely okay.
Excellent. Next question is about teachers' school holiday payout. So similar to the one we've already answered. Our organisation is a school. Teachers have a salary which is spread across the year, incorporating school holidays. Teachers who terminate partway through the year may be entitled to payment of a portion of their school holidays according to how many weeks they have worked during the term. The ATO has previously advised that this is not considered unused annual leave, and have advised that we should therefore pay superannuation on the termination payment and consider them ordinary time earnings. For STP2, how should we categorise these payments, paid leave or gross?
Yeah, so it could be either, and it's going to come back to what is that actually called in that industrial instrument. So it would be paid leave or gross, depending on what it's called. So just refer back to that. If you need some more detailed advice on that one, Philippa, like maybe what we found is a couple, and we can't offer it to absolutely everyone, but if you're seeming to get a few of these that are coming through about these teachers, sort of, you know, if somebody wanted to snip a clause out of their award, we would be happy to have a look at that, because sometimes we know then what questions to ask, and when we can actually see how it's written, it helps us provide that advice.
Yeah, fantastic. Now, our time is up, Chantel. I've got 3 questions left. Do you have time to stay on for 3 more questions?
Talk, absolutely. Yeah.
Lovely. So the next one is again from Kobe. It's around salary sacrificing. We use an external company to handle our employer's salary sacrifice arrangement. We make before tax deductions from their pay as well as after tax deductions and send them both to an external company. The before tax deductions are quite straightforward and we have categorised them as salary sacrifice, but we don't know how to code the after tax deductions. These deductions are essentially move money the employee is setting aside to offset the fringe benefit tax that they may have to pay. Should these after tax deductions be categorised, exclude from STP reporting, and should they both be before and after tax deductions be excluded from ordinary time earnings?
Yeah, so it's a really good question. So just remember, salary sacrifice means pre-tax. So Kobe's absolutely right in that. Yes, sometimes employees do contribute post-tax amount to like reduce their FBT liability of their salary sacrifice components, but those post-tax contributions are not reportable. So as pointed out, there are only a couple of post-tax things that are reportable in STP, and that's fees, workplace giving, and child support are the only things where you would ever report in STP post-tax amount.
Excellent, thank you. When someone is moving from full-time to casual or casual to full-time, do I just change their basis of employment, or do we need to terminate them and start a new engagement?
No, from an STP perspective, no. You can just, like, 1 week I might be full-time this week and I might go back to part-time next week. That's all fine. You can just update that in the pay event. I know that there are some different agreements and some fair work things around whether you're supposed to pay out casuals leave and things like that. So your fair work things all remain exactly the same. But from an ATO perspective, where we wouldn't expect to see somebody terminated and then rehired just because they've moved from full-time to casual and vice versa.
Excellent. That makes administration much easier.
Absolutely, yeah.
Yeah. I'm curious to know how scholarship payments for educational purposes are treated in STP2.
Yeah, that's a really good question, actually, and there's a couple of ways. So if you actually go and have a look at the scholarship payments and tax, it's really good guidance, actually, on ato.gov, but there's a couple of principles here. So some scholarship payments are taxable, and so you would withhold from those. That means you have to report in STP because you have to report amounts paid and that are subject to withholding in STP. But once you go through all that stuff, if you find that the scholarship isn't taxable and you're not withholding from the payments, then you just don't have to report those in STP. So it depends on which one you're dealing with.
Excellent. Good advice. Just before we end, did you want to quickly talk about deferrals and penalties? I know it's a question we're getting asked increasingly, and you and I were discussing it yesterday.
Yeah, look, I'm happy to. So look, my key message around here, Philippa, is that we have really tried to set everybody up for success over these past 12 to 18 months by doing our webinars, doing our guidance. We write out to employers to let them know STP2 is here and it's coming, and all those different things that we've done. So you should have got some of those comms over the last few months. If you have a deferral that is expiring soon, and when I mean soon, you know, like Christmas time or, you know, very early, late December, have a think about whether you really do have a go live date in place, and are you really working towards that and you're pretty confident you're going to make it? Have you done all your mapping, that kind of stuff, and you're ready to kind of hit go soon? I am not trying to underplay how big a change this is for some employers, because I really recognise a lot of people have taken this as a good opportunity to clean up their payroll, look at their old business processes and do a really good review. So that is excellent. If you think you're not going to make it, by your deferral expiry date and you just need that little bit of time to help you get over the line, there is an employer deferral process that you can do, and it's online services, so you can just jump in there and pop it in. What I would not like to see is people deferring this for ages because they've not turned their mind to it. So totally and completely understand if there's a, you know, unforeseen circumstance, or you just need an extra month or 6 weeks or a couple of months to get on. And I know that December is a bit of a weird time as well for a deferral to be expiring. I know I think you mentioned attachés is expiring then. So look, really would like to see people put the work in and really get over the line, but it's okay if you need that little bit of extra time. So that would be my key message around deferrals. In terms of penalties, Philippa, we are not in, you know, despite what people might think of us, we don't want to penalise people. We would not penalise people for a genuine mistake, and we recognise that this is a change process. So, you know, don't panic about that. But if you're uncertain about something, go and check our employer guide out, or go and watch our little short, sharp topic videos that we did, because you'll probably find that the answer to your question somewhere in there. But look, I really, really appreciate the time and effort everyone's taken to put in to getting ready for STP. And I think we've got some really good outcomes we're trying to get for our community. But yeah, have that plan in place, have a go live date as soon as you can. If you're not going to make it, have a think about whether you need that little bit of extra time.
Excellent message. Thank you, Chantel. Thank you for taking the time to join us today and for offering to do this Q&A with our community. Thank you all to the customers that have logged in and listened or sent through questions for Chantel to answer. The question that you've taken the time to send in might answer 5 or 6 other people's questions, so it is really valuable. And based on what we're seeing, they are really topical questions. And depending on where you are in Australia, stay dry and safe. And that would be it for today. Thank you all very much. And thank you again, Chantel.
Pleasure. Thanks, everyone.
Thank you.